Hello, guys. How we doing tonight? I do want to apologize in advance. I'm still messing around with a lot of settings for the mic, so you might hear a little robotic voice here and there. So, just wanted to let you guys know in advance. I do understand the problem, and I am working on fixing it right now. I just need more of these recordings, basically, to compare my voice with the different settings because I don't know if you guys know this. Well, at least for me, that's how it is. But when I try and record myself and like listen to myself at the same time as I speak, it is fucking horrible. And no, I'm not going to spend 20 minutes talking to myself, recording myself, and then rewatch it. That's just not my thing. Well, hopefully, you guys are all doing great today. Hopefully, you guys all had a great trading day. I hope you guys can hear me all right, even though there's all that. Would love a quick confirmation in chat if you guys could help me out. A little wonky, I'm guessing, because it's taking a little longer to type than just yes. So hopefully it's not too bad. If not, I can switch things up right away, real quick. Going up and down, huh? Okay. You know what? Let me change the setting and I'll mess around with these on my own time. So, how about now? Can you guys hear me all right? Sound wise, I guess I can put it a little bit higher. Perfect. Awesome. All right. So I'm working on some settings to make just it sound better overall and less clicks and all that. Uh, but what I just did is removed my preset. So hopefully I'll get that down. If not, I can probably hire a sound engineer on Fiverr or something. But enough rambling about my setup, my microphone, and everything. What did price do today? Well, pretty clear, huh? We just had a nice expansion. I'm not going to lie to you all. I was expecting a retracement. So going into today, I was looking to short, especially since yesterday confirmed the formation of this fair value gap, right? Because it's a 3 candle pattern. I need to wait for this candle to close to call this a fair value gap. It also confirmed this high probability order block that is now in the discount of said range, right? And at that time, this was not a discount, but now after today, it is. So will I be looking for a retracement tomorrow? Well, definitely if the daily structure confirms it. But I feel like today is a perfect example of how do I react when I have a wrong bias? Because that's definitely what it was today. Today, Thursday, was expecting a high probability of retracement, even though, once again, right, you guys know I have my clear objectives, right? I'm always clearing drawings, so I always have to draw them back. But let me just do this. I'm looking at these relative equal highs, all-time high, but of course, first we have a plateau. I'm looking for price to expand once we reach this. And for those who are about to ask, yes, if we reach this today before New York, I will want to be trading it. Why? Because I traded every all-time high since I started trading, and I don't want to miss this one. Am I going to be trading this on my prop firm accounts, on my live accounts? Well, technically, yes, I will be trading it on my swing trading account, just so I can get my little screenshot and put it in my memories that, hey, I traded at another all-time high, just for fun. I believed. Just a fun thing I like to do for myself. What am I doing wrong? On my charts, we're already taking all-time highs. Maybe you don't have BADJ set. Yes, that would make sense. So basically what BADJ does, TradingView allows us to see continuous contracts, right? This little setting at the bottom of our screen. So TradingView allows us to see continuous contracts. What does that mean? Well, they glue all the contracts together, which allows us to see one chart where we see the continuous move of the asset instead of just every single contract. But if you don't have this setting on, which as you can see when I hover it, adjusts for contract changes, you'll see the values of the contract even basically before they were changed. So you'll see a bunch of fucked up values based on low volume and low liquidity. So if you want to see the actual real numbers, well, you're going to want to have that on. The only time I would ever consider having that off is if I was to use the contract rollover gap. Now, this is a concept that was shared to me by two wonderful people, Kit ICT concepts in this space if you're looking at it from X. And also another one who talked to me about these very much is Matthew, Captain Mickey, which is also a great influence to look after. They are great traders. So if ever you're looking at those and you're curious by them and you want to study them, those are the two sources that I would recommend. But that is the only time I ever have BADJ off. If not, I want to see the actual values adjusted for the contract change. Kid and his crew are awesome, 100%. Mick is also a lovely guy. These guys are definitely an inspiration to my mentality in this space, just sharing value wherever I can. But yes, enough rambling, right? We're 5 minutes in and haven't even got down to the daily chart, off the daily chart. But as I said, I was expecting a retracement, which did not occur. So how do I guess, react to these changes? Well, you guys know me. Anytime I have a bias, I want to confirm it with the daily structure. And what does the daily structure tell me right now? Well, I've told you guys this many, many times before. If we form a low early on in the day and get to trending, then I'm going to expect a trending day. It is really that stupid. And I understand that for some of you guys, it might be hard to notice, but power of 3 is also on your side, right? Because you opened. Accumulation does not have a specific amount of time that needs to occur, right? Manipulation does not either, but you need a specific end. So from that point on, you got to understand I'm trading New York, right? So this is where I open my chart. And just to give you guys a visual representation, let's look at it. This is what happened up to now. Now, you have two ways to look at this. You can expect a trending day since we've quickly expanded away from the open, and we also have a beautiful, important price point here, trading back down to the daily open before continuing. Same thing with midnight open. This basically makes the probabilities of retracing to these levels lower, right? If we don't expand right away after this level, then you should not anticipate a retracement to them. It's lower probability. Doesn't mean it won't happen, but it is lower probability than the average of 60 to 70% that we are basically used to seeing with opening prices. And once again, if you're curious, this data is all available on Rice Statistics. But what I'm seeing when I open, well, first of all, I'm seeing the London framework. So definitely London low is a target, bias is bearish, sure. But when I look at the daily structure, this is not a manipulation. For me to frame this as a manipulation higher and then look at the distribution lower, well, first of all, I would need some sort of SMT at the highs, right? If we form it early, I don't require SMT for me to consider it a high probability low of day. But if we form it late in the day, so basically after the Asian session, if you guys want a more specific time, I guess is the best way to put it, well, I need a SMT to confirm my idea. Even if there's SMT later, it does not matter. I need SMT at these price points. And we had plenty of opportunity to do so and did not form any SMT. So that's one confluence. But what if this is all complicated for you guys? And today when you open your charts, well, for example, I was bearish, or you open your charts and you had no clue. Well, first of all, I have a statistical framework. So whether I'm bullish or bearish, this is a high probability objective overall. If I'm bullish, I will wait for this target to be met or for high probability setup to form before. And if I'm bearish, well, I have a very clear target. Okay, well, let's look at what happened, right? We had 9:30. I believe we had 8:30 news. Yeah, it was 8:30 news. And we also had pending home sales at 10 a.m. This is not a high volatility event, so I don't mind being in a position before then. It's an orange folder, but just based on purely data, it is not a news that often moves price tremendously. Let's now get off replay mode. Well, actually go back. As you guys know, I like to do this for my indicators. Just looks a lot cleaner. And what do we see right at the 8:30 open? At the 9:30 open, sorry. We went for London low. So already there, your main objective lower has been taken. Do I have clear objectives lower? Well, if I'm in the 1 minute, I do have relative equal lows there, here and here on ES, right? These could be a very nice objective for sure. I'm not saying anything else for that. But what is more important is that statistical target has been met, midnight open even more. So you have two key objectives that had just been met, which we could call higher time frame points of interest, right? Or just points of interest if you prefer. Moreover, look at ES right here. We have divergence in that ES has not reached London low, while NASDAQ has. Also, if you just want an easier representation, this is data low, okay? This is the low formed from the 8:30 news. And if we look at ES right here, that same low, if I can draw correctly, that same low formed SMT with NASDAQ, with ES being higher, not taking out this level, while NASDAQ itself has taken out this level. So now, all of a sudden, whether I'm bullish or bearish, I have a high probability long here. And whenever I have a setup or a high probability long, even before these breakers are made, I have a framework forming. The question I ask in my mind is that, does my bias allow me to take this? Can I justify this move? We've just taken out a key point. We've just traded back down to the midnight open right here. This is what you see, right? Midnight open. And we have done so with a lot of SMT. So does everything align so that I can take a long? Yes. Can I short this? Fuck no. Right? What I have just described goes against everything for how I define a trading framework. Now, perhaps your vision might be different, and I'd be glad to hear it. Do tell me in chat, right? But the truth is, for me, there's no way I can short this. Even if I have these relative equal lows that I can perhaps target, we've just taken out a key level with a lot of SMT, and we are now reacting and forming bullish breakers. This is not a framework where I can short. For me to short, I would need to wait for the current day's high to be taken. And if you guys saw my Twitter post today, right, my X post, you notice that this was my break-even level for that framework. Why? Because after this point, I could now start justifying shorts, right? So like retracement, okay, we had a final leg higher, took out current day's high, we can now move lower. And even then, this was a low probability framework to go short, which is why I didn't close my long, but I went break even. And if we look right here with your first available entry, that break even would have almost stopped you out, but it did not. And I mean, that's a question of seconds, to be honest. But if you're like me and you mark it into your positions, as soon as it traded into this, it just expanded lower. So my entry was a little more like here. And yes, if you were late, sadly, that break even would have stopped you out. But this is a mechanical rule that I put myself. Well, I say mechanical, but break even is something I do quite discretionary as well. So it's not always mechanical. In this sense, it was truly that now a bearish framework can be justified, right? But the first real entry here, I love how, I'm always saying this, right? But I love how the indicator does everything for me. I can just look at the unicorns and see if it retraced into it. And we can see that the first one that we traded back down into was this one. 3 PD array stop loss rule would have brought your stop all the way down here, right? 1 PD array, 2 PD array. There's nothing on the left here, so 3 PD arrays, low of the fair value gap. Decent stop, honestly. You guys might have seen now that the markets have stabilized. We tend to see an average between 20 and 30, with PM trades actually having a smaller stop loss. Overall, very nice trade. It wasn't a premium of the range, right? I tend to tell you guys, I don't like to take trades up here, right? Why is that? Why don't I like that? Because they're a lower probability. You can start retracements with the move still being valid, but you getting stopped out. So that makes my setup worse. So this is not an A+ setup, but it is an A setup because we have SMT, a clear framework, clear stop loss, clear direction. Everything else is perfect except the fact that we are longing a little bit late in my book, which makes it a little worse. Does that mean I'll go half risk? No, it basically doesn't mean anything other than the fact that if one other thing was missing, for example, if there was no SMT at this area, I would not take this trade at all. It's also very nice to point out that we retraced low here, but if you see on ES, this was to form SMT. So it was actually quite a beautiful framework right there. Now for objectives, as you can see, current high of day does not offer enough risk to reward. So what is the rule with that? And exactly why I was just mentioning about my Twitter post. If it does not offer enough risk to reward, you go break even. So right here, you're break even. I can't take profit because it does not offer enough. Well, once we're up here, it does. And that is a 1 minute candle, right? So I did take profit here as well, then go break even, right? Because this 1 minute candle here, I'll zoom in a little bit, took out your target, but also ran an additional, what is that, 15 points almost? Yeah, 12.5 handles, which led to me being at 2R all the way up here, barely missing 2R, but I did not wait for 2R. Once I saw it was above 1.7, I have it right here. Basically, anytime I enter in a trade, I have a little thing that tells me what my 1.7 are. It's a notification I set up. All coding. This could be something worth adding to the indicator at some point. But definitely a very nice initial move. Then it was choppy, a little harder. If you did trail your stop, for example, to here, right, using mechanical trailing rules, you guys know this. Once I expand past this high, this can now become my stop loss. But I did not trail my stop because I had already taken profits. I had no reason to trail my stop in this area as the maximum RR possible was 2.5. This is something I do for later. Did you do that, Nico? I see your little crying emoji. Why not? It's very simple because this trader hasn't offered me enough yet. So I'll only start trailing on a runner. Right here, I took a small partial. I have not reached my main objective, which if you see here, was not that far away. 150 points to that target. And also, if we're just looking at all-time highs, 300 handles, this is something we can do more often than we think, right? And also, expecting this move, I just said so at the beginning of the PA review, I expect a trending day. Trending days trend until at least lunch. So there's a lot more this trade has to offer for me. Now, this is a question of experience. Of course, it's a little harder for me to explain overall, but I only trail runners no matter what, right? So I understand this can piss you off, and honestly, a lot of people probably got broken even here, but still a successful trade. Is it a lot of money? No. That's why I'm very happy. You know, I see people, I've seen a lot of this on the X, so I do want to comment on it, that are bashing 1R strategies. But if you have an 80% win rate for 1R trades, that means that 8 times out of 10, you're making money, and then 2 times out of 10, you're losing money, and it's always the same amount, then, I mean, you guys do the math, right? Oh, of course, you bring in commissions and you bring in variance. Sure, you're going to be on losing streaks sometimes. But if you have an 80% win rate, you don't need to worry about losing streaks. Your worst losing streak is probably going to be like 5, and that's already pushing it, right? So from that, I prefer to go from a conservative approach. So if you got broken even here, you still made money. And perhaps you left a lot on the table. Do we lack opportunity trading futures, the indices futures? No, there is opportunity almost every single day. When we do these PA reviews, I believe like since I started doing these like a year and a half ago, that we've had like 1 or 2 instances where there were just no trades. If not, there were trades, and sometimes there were all losses, sometimes there were all winners. But one thing I have proven for sure is the consistency of the Rise model. All right. So if I can say something, don't be mad if you get broken even a lot, because you're still going to make a lot of money. That's the truth. Can you jog my memory about the time range you use for lunch? Yes, for sure. And that's where we're going next. So it's perfect, right? Because if you did not get broken even here, the other opportunity to take profit is something I discussed about yesterday when an opposite framework gets found, right? The 2 frameworks I use exactly with this logic of form a range, looking for one side to get taken to go take out the other, well, is the opening range, the London range, and the lunch range. The lunch range for me is from noon to 1:30. The only time I will use noon to 1 instead of noon to 1:30 is going to be in one of 2 conditions. The morning consolidated, not the case, clear expansion, or our higher time frame objective has been met during lunch. So for example, if we reached all-time high or just this first level, which is an important daily swing point during lunch, then I would consider changing these settings right here to noon to 1 range and then look for a framework based off of that. I would still wait for 1:30 to trade though. So that is how I use the lunch range. let's say the DOL is not clear and you're just letting a runner, how much would be enough RR to start trailing? Honestly, if I'm not up 7R since my original position, there's no way I'm going to be trailing. Like, honestly, overall, I'll really never be trailing unless I'm up way too much R and I'm paying myself. And in that case, I'm just paying myself a lot in small increments. For example, if I know my objective is all the way up here, but my trade is down here, I just took a small take profit here. And as I just showcased here, I'm going to take another small take profit here. There was also 4 standard deviations that was met at this peak and also on this peak. If you guys are curious about that, do look in the futures chat. I dropped a Twitter post down there. Here, you know what? I'll actually go get it. Oh, it's super not far. So I'll just drop the link if you guys are curious. But this is my markup of today's trade pretty much. The closest thing you'll get to a trade breakdown, I guess, for me, about specifically where I take profit and because of what. So right here, opposite framework, same thing as the morning current high of day. Now there is a high probability we can go short and reach for lunch low. Moreover, after we expanded, and now we can look for retracement continuation, right? So this target has a high probability of being met. So I'm going to take profit of this trade because I'm long. Once again, since I was bullish now at that point, right, understanding the daily movement, I did not close my trade entirely, just took some profits, took some additional profits around this area at 4 standard deviations, and another at this level, 4 standard deviations. If you guys are wondering, intraday, basically, if I'm in a trade off of a breaker, I'll change my time filter so that I can only see this breaker or the nearby breakers, right? So in this case, I put it to 950 to 10, I believe. Yeah, 950 to 10. And as you can see, it only showcases these 2 breakers. If I remove the second time filter, here, I'll move away. And that's how after I just plot on my deviations, and I can only see these deviations of these breakers because I don't want to see any new breakers that gets formed. If you don't care for that, well, if I'm long, I can just put it bullish and just say, okay, well, let's do 930 to 1130, and now show me all available breakers, and you can see all the deviations at every point. Once again, anyone who has it probably knows this, but you can also remove this if you want a cleaner chart. These are just objectives for me. So if we reach one of these and I'm up enough R, well, this gives me a reason to take profit. And then once again here, and of course, you guys know my rule, 4 p.m. right here. I always look at the candle's opening price because that is the point where it was 4 p.m. That is final TP. Always, I fully close my trades. I am a day trader, not a swing trader, not a position trader, not a intra-week trader, day trader. Do you guys have any questions? Because truly, that is the one and only trade. We can consider, Nico, for your case, especially right now, right? We can consider what if I got stopped out break even at this point, right? Whether it's slippage or whatever, it did come really close. As I said, I marketed it in, so I got a slightly better entry. So even though this was scary, it wasn't too scary. Let's consider every possible outcome, right? So if I got stopped out at this point in time, let me actually put this back to default so we can also see bearish breakers. If I got stopped out right here, am I going to consider taking a short right at this point? No, because it's too far gone, truly, right? If I was looking for a short, it would be a retracement. And so I would be looking at the first discount in efficiency. And as you can see here, we pretty much almost retraced to a discount. So not a big enough framework. And otherwise, I mean, you guys can see right here, no bullish breakers were formed. And of course, there are bullish breakers that were formed. You guys know that I use small range look back because I don't want, for example, this to be called a bullish breaker. I'm not looking for continuation breakers. I'm looking for breakers that formed near reversals. If you're having a hard time understanding that, we have a very detailed tooltip here to help you out. Very straightforward. Sadly missed that morning move though, but pretty solid setup. For sure. Definitely wasn't the cleanest in terms of delivery initially, but once we got going, we trended very beautifully here. What if you weren't in this long and you would have considered this short? Well, I would have considered this short 100%, right? If I didn't take any morning trades, I would definitely consider it. It is not a very beautiful setup, but it is a valid setup. If we use a 3PD array stop loss rule, you have the inversion fair value gap, and it does seem like you only have bearish fair value gap, and bearish order block. So you'd have your stop at that swing point. Pretty clear stop loss here. Would not have much time to think. But is the move... Oh, well, actually, there was an earlier entry that I missed because that bearish unicorn became a bullish unicorn right after. So you would have a better entry here. So fair value gap, order block, swing point, which is not the invalidation. So you would have had a larger stop loss, but still offered better risk to reward. This would have stopped you out at the same exact place pretty much, just a little bit later. Would this setup be good? Yes. It's not because we moved a little bit higher that the setup is no longer good. It is still a valid short at this point. And see, this one would have offered plenty of RR before stopping you out. So is there an opportunity here? Well, let's go look to the 5 minute. So this is for my bearish people, right? So in this case, the range I'd be referring to is definitely all the way to lunch low, right? This is the framework I'm going to be looking for. So it did not reach what would have been the partial objective, right? The first discounted efficiency. But at 3.47R, you guys know me, I've already taken profits before. So now it's all about finding a reason why I can remove some of my position, right? So for example, using standard deviations or standard deviations aligns with this swing low, which is in a discount of my most recent range here. So I mean, first discount and efficiency of the 1 minute range for standard deviations. That is how I find my targets. So I mean, pretty simple 3R partial into break even trade. I mean, there was a successful short, right? That's why I say bias rarely matters. It's more so about patience. So if I made 3R and lost 1R, well, if I was bearish, this is still a profitable day. And I mean, look at the delivery. Very, very bullish delivery here. And I mean, if you looked at the morning, well, here you had no opportunity to short. Here it would have been a loss. As I said, this is not a valid short setup. This one is a little higher. You could frame some shorts, but even then, there's no way I can frame shorts with this framework. So only valid shorts would be in the PM, which would have ended with at least 2R net profit. Wouldn't you agree that if you didn't get in the AM long, you missed the move and should move on? 100%. So am I going to take a long in the PM session? No. But can I take a short? Yes. Because that's not me trying to trade this move later. It's me looking for a retracement of that move. That's why I always say I can frame both sides. But yes, if, for example, I was looking along here, definitely would not look to continue longing because I'd just be late on the move. If I miss the first entry, I just missed the move, right? That's a rule I shared with you guys so that I personally avoid FOMO. But taking a short is completely different. Now, at this point, the short is not valid. At this point, the short is not valid. I don't have a good framework. So I'm not going to take a short there. But at this point, with the lunch high, this is a valid framework. Is my framework still good even though we trade a little higher? Yes. So there's a big difference between me trying to continue going long here or in the PM or me trying to go short in an invalid framework, right? This makes no sense for us to go target this. This is a point I would like to not see be broken, right? London low SMT, clear SMT, a lot of expansion since then. But it does make sense for me to look for a PM retracement, right? We had an expansion in the morning. We have a lunch rate framework. We can look to retrace to our first discount and efficiency of this range, which we clearly did not, but it still led to a profitable framework. Does that make any sense, Nico? Hopefully it does. Yes, sir. Always lovely. I do like to spend a little more time on these things, right? And that's why today it's been 30 minutes since we've been in here. But I feel like it's important for you guys to not just see it and not just, basically take note of it and remember it, but more so understand it. I feel like it's a key aspect that most trading educators and such just skip. They just tell you, oh, look, this works, trade this. Okay, cool. But if you don't understand it, you'll never trust it. And if you don't trust it, you'll never be able to execute properly on a model. At least that's my personal opinion. We have any final questions before we call it a day? We've been in here for 30 minutes, which I'm trying to keep them shorter so they can be rewatched. I won't be mad if you guys put them on ×2 and rewatch them on YouTube for the people who are doing it on YouTube right now. Seeing a little of you guys type, I'm going to give you guys a sec. Thank you for your time. Another great review. Lovely. I am glad I can be of service, guys. On that note, though, we're going to call it a night. I'll see you all tomorrow for our last peer review of the week. You guys might be glad or not to hear it, but it will be at 5 p.m. You guys know me, all right? Friday nights are sacred. Whenever I'm going out or doing some things with friends, having a social life, 5 p.m. is a lot better for me. So I'll see you guys tomorrow, 5 p.m. Have a good one. Always a pleasure.